In recent weeks, concerns have grown among PiNetwork pioneers regarding the cryptocurrency's fluctuating price on exchanges. Some fear that Pi may drop below the $1 mark again, leading to uncertainty about its long-term viability. However, those who understand the core principles behind PiNetwork and its value proposition remain unfazed by market fluctuations. Since its initial listing on certain exchanges, every price point Pi has reached has been a discounted valuation compared to its real potential. Even its all-time high does not accurately represent its true worth. This phenomenon is not unusual in the early stages of a cryptocurrency's journey, particularly one as unique as Pi. Unlike traditional cryptocurrencies that launched directly onto trading platforms, PiNetwork was built with a different vision, one centered on mass adoption, decentralization, and real-world utility. The value of Pi is not solely dictated by speculative trading, but by its growing ecosystem, the number of active users, and its acceptance as a medium of exchange. Several key factors determine Pi's true worth: mass adoption and accessibility. PiNetwork has amassed over 60 million engaged users, making it one of the largest crypto communities in existence. This level of participation provides a foundation for long-term sustainability, unlike many speculative tokens that experience rapid rises and crashes due to market manipulation. One of the fundamental aspects of a cryptocurrency's value is its usability. Pi is gradually being adopted as a payment method for goods and services, with merchants in various countries beginning to accept it in real transactions. As the ecosystem expands, demand for Pi will increase, further stabilizing its value. Unlike many cryptocurrencies that release large amounts of tokens into circulation immediately, Pi follows a controlled distribution model. While some Pi has been unlocked for trading, the vast majority of mined tokens remain within the ecosystem, awaiting further integration into the open mainnet. The price fluctuations seen on exchanges are largely driven by speculation and the current liquidity limitations. Since Pi's official open mainnet has not yet launched, the tokens being traded on certain platforms represent a small fraction of the total ecosystem. These limited trading volumes do not provide an accurate representation of Pi's actual market demand and potential. Why pioneers should not be concerned. Historical trends in cryptocurrency markets have shown that early-stage volatility does not dictate long-term success. Bitcoin, for instance, was once deemed worthless, and Ethereum faced skepticism in its infancy. Today, they're among the most valuable digital assets in existence. PiNetwork follows a unique trajectory, one that prioritizes a strong community, real-world adoption, and long-term sustainability over short-term price speculation. As the project moves closer to the open mainnet phase, its value will be increasingly determined by real demand rather than temporary exchange price movements. Instead of focusing on short-term market fluctuations, pioneers should concentrate on Pi's long-term vision and ecosystem development. The true worth of Pi is not defined by its price on speculative exchanges, but by the millions of people using it as a decentralized currency for everyday transactions. Will PiNetwork's value be recognized in the future? If history is any indication, undervaluing a revolutionary cryptocurrency in its early days is a common mistake. PiNetwork may very well follow in the footsteps of Bitcoin and other major digital assets, proving that real value is built over time, not determined by momentary price movements. Only time will tell, but for those who understand its true fundamentals, Pi's future remains bright.